What's up everyone, it's Caddy with MoneyVest. So markets here hitting yet another new all-time high, with portfolios also hitting new all-time highs for myself and for many of our members. Saw all the conversations in our Discord, amazing, intelligent conversations around the markets here, of course, as we continue to power through with the S&P at over 5,100 and the NASDAQ composite finally breaking out another 1% on the day, trading up to over 16,200 points on the day as well. So as always, if you enjoyed this video and find it helpful, make sure that you drop a like, and of course don't forget to subscribe to the channel. Links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos. You will be able to access our moneyvest.com platform here very soon, and of course get access to all the trade alerts, trade ideas, buy and sell alerts, including our newsletter, which is going to be released every Sunday. So every week I'm going to be sending out a newsletter with my entire analysis on the macros, on the technicals of individual stocks, Magnificent Seven, of course, big tech, and the markets, and including a lot of investable and tradable opportunities as well. So it's going to be a very, very actionable newsletter that you can kind of dissect and learn from in our weekly updates, as long as the private videos and members only videos as well. Also, do connect with me on Instagram. My handle is going to be CASWRP. Would love to connect with you there. I do post a lot of interesting stories, updates, portfolio updates, polls and tips and strategies, all that stuff. So connect with you there. Also, this right here is the market. NASDAQ up over 1%, 16,270, with the S&P pushing up over 5,100, and the Dow Jones a little bit over 39,000 as well. This is all of Fang Mint stocks here. Google slightly down about 1.2%. Apple also lower. Tesla flat. Microsoft pushing up a little bit. Amazon almost at over 83 basis points, 178. And then, of course, we did have Meta pushing up to new record highs of over $500 per share, up 2.5%. Netflix crossing over $600, up over 2.7%. And Nvidia and AMD doing what they do best, hitting yet another record high at over $822, up 4%, with AMD up over 5.5%, $202. And SMH, which was, again, an ETF that I've been dollar cost averaging into very, very aggressively, up 4% on the day at $220. This does kind of scare me a little bit. This does make me somewhat concerned with where we are at the moment, considering how overbought overall semiconductors and chip stocks are at the moment as well. So Fed's Kugler is optimistic on disinflation without big job losses. So that is, in other words, basically an understanding of soft landing. So Governor Adriana Kugler on Friday signaled that she sees the elusive quote-unquote soft landing of falling inflation amidst a healthy labor market within reach for the U.S. economy, noting that inflation expectations remain anchored and the Fed has avoided a wage price spiral as well. She says, and I quote, "I'm cautiously optimistic that we will see continued progress on disinflation without signaling or significant deterioration in the labor market." And Kugler notably did not lay out her expectations for when or how fast the Fed should cut its policy rate, which drove up rapidly in 2022, of course, in 2023, holding up to well over 5.25 percentage points, to as much as 5.5% as well. Now, as we already discussed, when it comes to the Federal Reserve, we already know that there is going to be some rate cuts coming out in 2024, just not an idea of when those rate cuts will happen and how many rate cuts will happen. So that's the two big question marks, two uncertainties the markets are trying to kind of play around with. But as we already know, that the Federal Reserve and Chairman Jerome Powell has already mentioned that there is unanimous understanding among FOMC members, and almost all of them are on board for some rate cuts in 2024. In the next meeting, which is going to happen in a few weeks, we're going to get the summary of economic projections. That is going to give us a little bit better understanding of what 2024 policy rate looks like going into next year and the following years with respect to interest rates, inflation, GDP, and unemployment expectations as well. But the bottom line is the markets are very much optimistic still that, okay, 2 to 3 rate cuts are coming, even though there has been a significant repricing down from about 7 to 8 rate cuts down to only 2 to 3 rate cuts in so far 2024. Now, Nvidia, almost $2 trillion market cap. I did a complete video on the semiconductor and chip stocks. It's Nvidia's stock market. You choose how to live in it, and that's really what it is. So it's either you own the hottest stock in the market right now, or you don't. And most of the S&P 500 gains, so in other words, almost 28% all the S&P 500 gains so far in 2024 have come from the astounding rise of that one company at the forefront of the boom in artificial intelligence. Nvidia stock is up 59% in 9 weeks after gaining 239% in the last year. Just think about that for a second. The entire index, S&P 500, only one company makes up for almost a third of the index's gain so far in 2024. There's over 500 companies in that index, and only one company is responsible for 28% gain for the index. Now think about the level of concentration that we are going through for this particular index. So Nvidia's market moment, it's easy to feel left behind, which is why it's vital to put things in perspective. These conditions aren't unprecedented. Stocks aren't in a bubble, and beating yourself up or piling or risk to catch up to a racing market never ends well either. Now, what I've done is that obviously for Nvidia, I don't own it directly because of the valuation concerns, but I do own SMH, which is the semiconductor sector, the ETF, as a complete sort of broad-based ETF that has both AMD, Nvidia, of course, the likes of Broadcom and Qualcomm and Texas Instruments, On Semi, Supermicro. There's a lot of companies that are part of the SMH index that I'm up a little bit over 35, close to 40% on, that I'm very happy with. It's a bigger position in my portfolio, so I've been dollar cost averaging into it for the last several weeks, and it has done really well as Nvidia, AMD, and all these chip stocks have continued to move higher. Now, of course, individual stocks are going to be volatile. Just because you're seeing the better side of it, it's pushing up over 40, 50%, doesn't mean that it can't drop 40, 50%. And most often, we've discussed this on the channel, that people ignore the risks. People ignore the risks associated with individual companies and stocks, and they always look at the brighter side. They always look at the optimistic reward and the actual benefit that they can get from owning that stock, right? Nobody talks about the hidden risk involved with investing. That's exactly why I'm here, to bring you very objective analysis. Now, look, I may be conservative, right? But at least with my analysis, there is going to be high levels of capital preservation. There's going to be high levels of risk management involved in risk analysis, so you're not kind of blindsided with any type of a situation where the stock, let's say, drops 40, 50%. In very rare cases, I've witnessed that. PayPal is one example. Meta was one of those examples, but of course the company eventually won out really well, pushed up to new all-time highs at over $500. I had to go through a lot of comments and a lot of things during 2022 bear market when Meta was dropping really hard, and as we learned from that experience, that Meta was a very solid, very high quality business. We held our conviction in that company. And of course, a couple years later, new all-time high, well over $1.2, $1.3 trillion market cap. Same thing I believe is going to happen with Enphase. It's already happened. I'm already profitable on that stock, is that it has recovered over 100%. But of course, Nvidia is a whole different stock, whole different level that it's trading on. In my opinion, again, $2 trillion market cap. It's, price to sales, it was over 17 to 18 to 20 times. I know a lot of people like to quote the earnings expectations, but that is again based on an expectation, right? So is Nvidia going to be able to generate 40, 50, 60 billion dollars in earnings profit that we're talking about, net profit? Maybe it can, but again, how long is that going to continue, and how is going to be the growth rate over the long term for Nvidia as well? That's something that we have to keep in mind and understand, because eventually when the growth rates come down, all the optimism, all the euphoria, all the greed is going to start to wear off, and it's going to fade. Same thing happened with Tesla. Same thing is going to, in my opinion, happen with SMCI. And of course, Nvidia is no different. Yes, it's one of the best, hottest trending stocks in the market right now, but I'm here to tell you about the risks associated with that as well. And I'll tell you both sides of the story, right? If something's cheap, if something's undervalued, in my opinion, I'll tell you that if something is, let's say, overvalued, or there is a lot of euphoria, there's a lot of greed, there's a lot of momentum. Price to sales, of course, 17, 18 times is very, very high. It's, again, I would tell you that also, right? So I'll give you both sides of the story for each company, each stock here. So Meta pushing up 2.5%, Nvidia up 4%, Broadcom, AMD, of course, Qualcomm, Amazon, everything pushing higher. Microsoft's up 45 basis points, 60 basis points drop here in Apple. Google down 1.2%, Oracle, Adobe, everything pushing higher. And this right here, again, is the entire market. So financials, insurance, we got, utilities, we got healthcare, comm services, consumer cyclicals, all of them pushing higher here. So there is a little bit of that broad-based rally once again starting to come back in. But this right here is the entire market. So most sectors green, utilities slightly down about 40, 44 basis points. In the last 1 week, of course, a little bit of a split market. So technology, consumer cyclical, real estate, materials, all of them pushing higher, with utilities, healthcare, comm services pulling back. And in the last 1 month, of course, everything is green, with all 11 sectors pushing higher and green in the last 1 month. So 1 day performance, we got cocoa, we got Nikkei, we got ethanol, silver, all pushing higher, with rough rice, live cattle, NASDAQ, we got soybean, platinum soybean, all of them pushing higher, with corn, natural gas, wheat, sugar, cotton prices pulling back here on the day. Bitcoin just a little bit over $62,000, so very, very nice move to the upside, with Ether just over 3,400 at the moment as well. So going over to Bitcoin, so trading at just under $62,000, so almost at new all-time highs, which is going to be sitting roughly at 69, close to $70,000. So very, very strong move to the upside. Of course, it is overbought at the moment with the R side almost 80. If you take a look at Ethereum, just over 3,400. Again, a little bit more on the overbought side, but getting up to that resistance and that target of 3,500, and that next resistance, and of course that next target is going to be closer to 4,800 for Ether at the moment. So that is going to be that level to keep in mind for both Bitcoin and for Ethereum as well. When it comes to volatility, again, continues to slide lower, down about 2%, a little bit over 13 at the moment. And this right here is going to be that red rectangle between 11 and 12. And again, all the way up to 18 to 20 levels is going to be that green rectangle, those levels to keep in mind. And of course, lots of consolidation in between that range between 11, 12 to as much as 14 to 15 levels, just moving sideways in that direction for volatility. When it comes to the markets, again, S&P 500 with a huge breakout to the upside, new all-time highs. Congratulations to all investors. Like I said earlier in the video, my portfolio at a new all-time high, most of our members' portfolios, and they're doing really well. So I'm super, super happy and excited for all of you that are doing really well in the markets. That really makes me very happy and genuinely proud of what we have accomplished, because you go back a couple of years, you go back 2022, completely different environment. If you were part of our community, if you were part of that environment in investing back then, you know that it was a completely different environment. It was kind of like this vibe of the world is falling apart, the sky is falling, everybody's selling, markets are down so much. But of course, a lot has changed in the last couple of years, and people who stuck through the tough times are able to benefit the rewards from the good times, which are happening right now. But cherish it while it lasts, because as we already know, nothing lasts forever. Nothing is permanent. Everything is temporary. And in fact, the only permanent is change. Only constant is change, meaning that every time things are changing. And these times, as we already know, are not going to last forever. So enjoy it while it lasts, because like I said earlier, and this is my important message for all of you watching this video, is that, back in 2022, we went through kind of a very, very hard time. And now we're kind of going through a very good time. And that is right there is a very good case study of how cyclical the markets are, how cyclical market sentiment is. I can tell you right now, as of today, that in the future, there will be another bear market, right? So in my view, there will be another bear market, because that's how the markets work. They move in cycles, they go up, they go down, they go up, they go down. So cherish it, be grateful, in my opinion, be blessed for what we have accomplished together. Portfolios hitting new all-time highs, making tons of money. That's great. But also be aware and be cautious, be level-headed, be grounded in your approach, that these times may not last forever. And that's something that we have to come across in the future. There may be another bear market, and I only see them as opportunities. I only see recessions and bear markets as potential opportunities to, once again, dollar cost average and look forward to that recovery and that bull market once again. So that's something that I wanted to kind of address in this video also. But again, S&P 5137, new all-time highs, 80 basis points higher. NASDAQ here, on the other hand, pushing up over 1%, 16,200, brand new all-time high for the NASDAQ composite as well. And support level is going to stay put at 15.1 to as much as 15.4, with a little bit of that negative divergence on the NASDAQ moving forward as well. So we are seeing a little bit of that pullback on the R side. And again, price continues to move higher to new all-time highs. So again, congratulations to everyone. Apple here pushing down slightly, 60 basis points. So starting to see a bit of a breakdown below $180, which is actually a good thing, because I'm more excited about buying Apple in the 160. So 160, 165 is going to be that level where I would be very excited and very happy to pick up more shares for Apple. And resistance is going to stay put at 190 to as much as $198 per share for Apple. So lots of consolidation sideways, a little bit of that lower high and lower low, and support level is going to stay put at 165 for Apple moving forward. Talking about Amazon, so Amazon here continues to move higher, breaking out to 176, 177, resistance all the way up to $190, and support level is going to stay put at close to 155, down to 143. I did have covered calls that expired today in the 170s, but I did also receive close to $4.50 in premiums. So my actual sale price was closer to 175, so I basically gave up about $3 per share upside on Amazon, which I'm completely fine with considering how much it's moved higher. I was able to free up some cash, and I can deploy that into some other opportunities. Again, support level is going to stay put down to 155, down to $143, with of course RSI approaching closer to 70 levels on the RSI at the moment as well. So technically speaking, it is quite reasonable, but of course a huge breakout on Amazon, very nice move. And next target and resistance is going to be closer to $190 per share. Talking a little bit about Tesla, and Tesla here really struggling to really find that momentum, right? So 38 basis points higher, just over $200. It's been kind of back and forth over the last 3 to 4 days. It hasn't really been pushing higher all that much. So it's kind of approaching that resistance, coming up to that level. And of course, if we do see a further breakout to the upside, next target and next resistance is going to be closer to $240 per share, with a support level like close to 150s, 151. That is going to be that level to keep in mind, but still very much in the context of a downtrend of lower highs and lower lows as well. Nvidia, on the other hand, pushing higher very, very nicely, up a little bit over 4%, so $822, and the market cap now sitting at just over $2 trillion here. So absolute beast of a stock. Just cannot seem to find any sort of pullbacks or profit potentials. Like, it just keeps on trading higher and higher, and it's just probably one of the easiest stocks to trade to the upside, but also carries the most amount of risk when it comes to technicals. Advanced Micro Devices also following on Nvidia's footsteps, huge breakout. So the thing is that Nvidia actually had an ascending triangle breakout. This right here was the breakout that we witnessed for Nvidia, right? So this was the ascending triangle over here, and then of course since then it's had a huge breakout and it's rallied over 60%. I feel like AMD kind of might be in a very similar situation, where this right here is the symmetrical triangle and we're starting to see that breakout. Are we going to see another 50-60% move from AMD? Who knows? Who knows how long this semiconductor chip stock rally has to go? But again, this is a very strong breakout to new all-time highs. AMD hitting a new record in market cap at over $327 billion. So very, very nice move to the upside. AMD, one of my top stocks, doing really well, so can't complain there. Talking about PayPal, so one of my not so great stocks and picks here, still consolidating sideways, just a little bit over $60. So consolidating $57 going to be that support, resistance, and targets back up to $67 per share for PayPal. So trading, within the context of this downtrend, so lower highs and lower lows, and support levels going to stay put at $57, as we've already discussed. Resistance all the way up to $67 per share for PayPal here. Visa, on the other hand, trading pretty much at an all-time high, so a little bit over 18 basis points green. Support level is going to stay put at 279, down to as low as 245 and $250 per share for Visa, and continues to move higher, drift higher highs and higher lows. And like I said, support level is going to stay put down to 279, down to in the 250s and 240s for Visa moving forward as well. Talking a little bit about Meta Platforms, and Meta here pushing higher to new all-time highs at over $500. Huge breakout above 488, so up almost 2.5%. Market cap sitting just under $1.3 trillion. And once again, people who believed in Meta have benefited really well, from low $80 per share to now well over $500 per share. So absolutely phenomenal move to the upside for Meta, and again, new all-time highs. So we're a little bit of in a price discovery at the moment. Talking about Netflix, and Netflix here also breaking out to new highs here, $600 past that level, to 2.7% gain on the day. So still got a little bit of ways to go to new all-time highs at 690, almost $700 per share. So that is going to be that next target and that next resistance to watch for Netflix, but a huge breakout above $600, and this is going to now turn into a support for Netflix here, with of course RSI with a negative divergence and also trading almost at overbought levels here at the moment. Now Google is struggling, down another 1%, so still struggling to break out of that resistance. So it obviously broke down, finding that resistance very hard to break out of, and that next support and that next target is going to be closer to $126 per share for Google. And I wouldn't be surprised if we do see that momentum a little bit more for Google to the downside. RSI and MACD still got a little bit of ways to go before they become oversold at the moment. And then finally, we got Microsoft, and Microsoft here pushing up over 45-50 basis points. Resistance is going to be closer to 421, and support level is going to be staying put at $384 per share. And of course, trading within the context of this higher high and higher low. And like I said, resistance is going to be closer to 421 for Microsoft. Support level is going to stay put at 384. And then finally, talking a little bit about Enphase, and Enphase here on the day, pushing up very nicely, up a little bit over 2%. So very nice move to the upside, 129. I do have covered calls at 130. I closed out my 140 calls for a 40% profit yesterday. My 130 calls are going to expire next week on Friday. So resistance right now at 138. So next week is going to be very important for me for Enphase, because if it trades back about 130 plus, then my calls are going to be in the money. Right now, they're off by 34 cents. Resistance and target is going to be closer to $130 with the support right over here, roughly around 108, low 100s for Enphase as well. So next week, we'll find out how it ends up trading. We do have a double top resistance in the 138, so we'll keep a close eye on this stock moving forward. So hope you all enjoyed this video and a complete update on the markets here. Once again, huge congratulations to everyone for an amazing year last year, and of course so far this year. New all-time highs coming in strong. Happy investing. Make sure that you drop a like, subscribe to the channel. Links to our Discord and Patreon is going to be down below. Happy investing, and I'll see you all in the next video.